So I think you've got to segment, if you want to look at the impact of oil on clean energy, you've got to segment it because relatively small, you mentioned the 310 billion invested last year in clean energy. Most of that is in the electricity system, and so it doesn't compete directly with oil, it competes with gas. So you've got some bits that compete with oil. There are countries, Saudi Arabia, Kuwait, Mexico, where a lot of oil was burnt to generate electricity, and there was a big shift, the big projects in Saudi Arabia that were announced a few years ago become much less attractive when the oil price halved. But generally, I think there's some other areas. So, for instance, we were getting a lot of stories last year about, for instance, mining companies that use a lot of diesel in remote locations looking to hybridize their diesel generation with solar because they'll just buy less diesel and that will have a positive NPV and so on, and that will slow down. But mostly the near-term effects will be seen through the gas markets. What does an oil price drop do to those contracts in Europe and Asia where there's indexing to oil and so on? I think if you look longer term, it pains me, I agree with Jeremy, that I think that what you'll see, and I would focus in a little bit more and say that it is absolutely the international oil companies that are under the cosh here, because they have, over the past decade, 2 decades, had to retreat to very high cost sources of supply, whether it's the Arctic, whether it's very deep offshore, really technically demanding and expensive sources, and of course unconventional. And so what we've now got is the water level dropping in terms of price, but the people are exposed. It's not the whole oil industry, it's clearly the international, the IOCs. And I think it will be a very difficult operating environment. I don't see the oil price bouncing back quickly, because there's also stuff going on the demand side. And a lot of the commentators focus so much on US unconventional, the sort of 3-4 million barrels a day there, and they're not looking at, well, the forecasts that we have for demand are consistently undershooting. Cars become more efficient, electric vehicles, even though there's very few of them, focus the minds of the car companies, and so they become more efficient. You get cafe standards in the US, and people drive less. People in cities drive less, particularly in cities. So what you've got is a demand side shifting at the same time as changes, and I think people are overly focused on US production. As a result of all that, I don't think the oil price comes back quickly. It will harm certain parts of the clean energy industry, but broad swathes of it will sail through relatively unscathed.
And when you say it will harm some of it, are you thinking mainly electric vehicles, biofuels?
So electric vehicles, the shift from oil-based production in those countries where it still happens, mini grids on islands have been really suffering by having to import very high cost fuel oil and so on. Those sorts of areas will slow down, and then of course it does push down gas prices. So at the margin it becomes harder also in particular parts of Europe. If you look at the UK with European gas prices down, I mean there should be much more focus on why that's happening. It's not just because of oil, but that is going to have an impact. And it is going to slow down the shift to clean energy. It doesn't change the destination one iota.
If that would have happened 4 or 5 years ago, we would be much more in trouble. Because the good thing, the huge investments we have triggered in Europe because of clear legislation, targets, support schemes, this enormous German PV market, which then attracted the Chinese to see this is the future PV. So the costs have come down. On wind, the costs have come down. So renewables are so competitive now that I'm not really hesitant about that this will be a major setback. And maybe one word to Bertrand. When you call for efficiency, I think you do the right call. We have to combine efficiency policies, renewable policies, and grid policies. I think the combination of these three is what the future can be.
I see declining oil prices doing to the renewables industry, particularly in Germany.
let's at first thank you for inviting me today. And I'm very happy of especially sitting on this place because behind me is a nice arena picture and there is a high voltage tower line or tower from a high voltage line. So the problem is I'm the only one who likes it normally in the country. The other ones normally don't like it, but I like it. It's the second thing where I'm very happy of being here, seeing today this amazing plane. In my former times as a student and schoolboy, I was a glider pilot, so my heart is pumping in the moment, so I'm very happy of being here. Now coming to the question. The good thing is that in Central Europe, at least, the electricity price is not very much linked to the oil price at all anymore. There is no connection. The gas price is mainly dominated by the Russian gas contracts. In the past, they were linked to the oil price, but due to the high oil prices, the gas companies managed to negotiate new contracts. Nowadays, they are not really linked to each other anymore. So what we see in Central Europe, the oil price has on the electricity market not really an impact anymore. That's a good news. The bad news is that of course the further installation of renewables, especially in a country like Germany, in our grid region, we have already 40% of the consumption, I mentioned that already yesterday, covered by renewable energies. That has an impact on the electricity price, causing very low electricity prices, which create some trouble in the overall market design. That is one of the questions that need to be addressed in the near future. What's the right market design to really overcome that? It's important for the renewables on the one side, but it's also important for the complementary power plants that we will need in the next years.